Welcome, I'm Alistair Greener and I'm at the London Stock Exchange studios to talk to James Hart, Investment Director at Witan Investment Trust plc. Witan Investment Trust invests in global equity markets by selecting third-party managers. We're here today to find out how Witan's portfolio of shares is created. Good morning.
Good morning.
Now, in your annual report, Witan says that it focuses on high conviction managers to avoid over-diversification. What exactly does that mean?
Well, there are tens of thousands of companies listed on stock exchanges around the world. High conviction managers aim to pick the very best companies they can at the best available price and build those companies into a portfolio of a relatively small number. So we're talking here about 20, 30 or 40 companies in a portfolio, rather than the many hundreds that you might find in a more diverse portfolio.
And what are the advantages of that approach?
Well, the advantage of that approach is that you start from the bottom up. You do an extensive amount of research into the companies that you've identified as your investment universe, and that means the companies from which you want to select your portfolio. That should give you a knowledge advantage over those people that run more diverse portfolios that are perhaps less concentrated and less focused on specific areas.
You said bottom up, and we've heard that term bottom-up investing. What exactly is that?
Well, bottom-up investing involves trying to filter out all the noise that we experience in financial markets these days, and this might be noise that's driven by macroeconomic events, by a move in the oil price, by President Trump's tweets, and really focus on the fundamentals of the companies in which these managers are investing.
How does Witan's managers, how do they invest in their stocks? How do they choose their stocks?
Well, they all employ slightly different processes, but in general, they will run financial filters which try to identify companies that are strong and weak, and obviously filter out the weak ones. And once they've done that, they will engage with the management of these companies to make sure that what is happening in reality is what they're seeing represented in the numbers that the companies are reporting. They have teams of analysts as well who will go out and talk to competitors, they'll talk to customers, they'll talk to even ex-employees to find out as much as they can about these companies before they invest, and then they'll continue to engage with the management over the long term to ensure that they remain happy with the companies as an investment opportunity.
Looking at these companies, could you give us some examples of some of the ones that you've invested in?
Yes, one or two examples. For example, Unilever is a company that's been in Witan's portfolio for a number of years. It's owned by 3 or 4 of our third-party managers. Unilever, of course, is better known for its brands such as Marmite, Persil, Wall's Ice Cream. It's a dominant global business in the consumer brand space and is well established in developed markets. And it's also growing rapidly in the emerging markets, particularly in Asia, which gives the possibility for our shareholders to benefit over the long term, provided our managers have done their work properly and identified the opportunity correctly. But it's not all about just big brands and dominant businesses. There are companies in the portfolio which honestly have gone through a more troubled period. And these are better known as value companies, which rely more on their prospects improving over time, but because they've gone through a poor performance period, their shares are relatively cheaply rated. So the hope is that when you buy them, you benefit from an improvement in the rating as the company's prospects improve.
Do all your managers invest in the same way?
No, they don't. They look at the equity market, but they look at it through a different lens. Lindsell Train, for example, looks to identify rare and beautiful assets, as they describe them. Veritas look for high-quality companies that are available at a fair price, whereas someone like Pzena, who's a global value manager, will look to identify companies that have been through a period of poor performance where they can look for those prospects to improve over time and therefore for the rating to improve as well. But by and large, the one thing that they have in common is that they look for companies that are growing their cash flow and their earnings over time, and companies where they're able to try to predict those long-term growth in revenues, which should feed through to our shareholder returns.
We talked earlier on about bottom-up stock picking. How does that fit into the wider strategy of Witan Investments?
Well, the bottom-up stock picking enables us to build this globally diversified portfolio. And of course, when you blend together, and this is our job at Witan Investment Trust, is to blend together our external managers, in which case we've got 10 at the moment, to create this portfolio that's able to weather the peaks and troughs of the individual managers' performance, as their own particular investment style might go in and out of favour.
Your strategy of the high conviction stock picking, that by some people will be seen as quite a risky strategy. How would you respond to that?
Well, I think there's some truth in that if you were to put all your eggs in one basket. But of course, when we have this lineup of managers, and we aim to choose managers where their styles complement each other, we're never invested in one particular type of investment strategy. And also the portfolio has 350 to 400 companies in it, so diversified by the number of companies in which it invests. And so even if there was a disaster at one of the portfolio companies, that'll have less of an impact on Witan than it would on a high conviction portfolio in general.
Now, we're living in very uncertain times, and obviously people are looking to the future. So what about your investment managers? What sort of opportunities are they looking at the moment?
Well, I guess there are two really strong opportunities and threats, if you like, as well at the moment. The first one is the extraordinary pace of technological change. This has created investment opportunities, but it's also created risk, because managers that aren't fully aware of the impact of technological disruption on the businesses that they own could find that they own a company that is on its way to extinction. So our managers are focused, and indeed our board are focused on ensuring that they are treating that technological challenge with the respect that it deserves. On the other side of things, there's ESG, which is environmental, social and governance issues. Witan has been focused on corporate governance, and our managers indeed have been focused on corporate governance for a long time. More recently, the risks posed by environmental and social issues, i.e. companies not addressing those issues properly, a key focus for our managers these days.
Well, you've given us a lot of clarity when it comes to Witan's investments, how you work, and also a little bit of a glimpse into the future as well. So thank you very much indeed for coming in and talking to us today. James Hart from Witan Investment Trust, thank you very much indeed.
Thank you.